I would like to acknowledge the Gadigal people of the Eora Nation, the traditional custodians of this land on which we gather this morning, and pay my respects to elders both past and present. I am Daphne van der Oord, Head of S&P Dow Jones here in Australia and New Zealand, and together with the Australasian Investor Relations Association, we are delighted to welcome you to our S&P ASX Equity and Sustainability Forum. If my voice will continue on for just a little bit longer. We have an ambitious range of topics we would like to share with you this morning. And we're going to try and do this in a very short amount of time. The context for passive investment and trends therein, the application of an environmental, social, and governance framework to these trends, and ultimately, what does that mean for you as a company, a fund manager, an asset consultant, and investor? To help us, we will benefit from expert insights, starting with my colleague, Michael Orzano. Mike, would you like to come up here? Thank you.
All right. Thank you very much, Daphne. So thanks everyone for joining us today. It's great to see so many of you here. So I'm really just going to give sort of some brief comments on trends in indexing and ETFs before we get to the core of our content today on ESG. So as many of you are aware, I'm sure, there's been really tremendous growth in indexing in general and in the exchange-traded fund industry as well. This data here is sourced from the BlackRock ETP landscape, just showing the overall growth in global exchange-traded product assets over a little bit more than the last decade. So it's been growing at about 20% per year over the long run here, and has reached actually 3.9 trillion if I extended this through the end of March of this year. So the growth has continued very strongly over the past year or so as well. If you look more broadly, it's very difficult to get more broad data on given the lack of transparency in all institutional separately managed accounts and funds around the world. So I'm essentially showing ETFs as a more easily accessed data set, but we think this is reflective generally of the indexing market more broadly. Morningstar estimates that in the U.S., the share of passive index funds is around 1/3 of the total market now, at about $5 trillion. So of course, a lot of that growth you see is is due to market movements. We've been in a strong U.S. and global equity market over the years, which has driven a lot of things. But of course, fund flows have also been very, very strong. Again, the BlackRock ETP landscape shows that the last several years, the aggregate flows into exchange-traded products has increased every year. Now skipping over to Australia, of course, the growth in Australia has actually been at a stronger rate, but of course growing from a smaller base. As of March, the exchange-traded product listed on ASX have increased to about 27 billion Australian dollars. This has been about 35% growth compounded annually since 2011. And one thing I'd point out too is that if you look at other markets like Canada, for example, the exchange-traded product market in Canada is just closing in on $125 billion. So it's it's a sort of an older industry there, much larger, about 5 times the size. But it's interesting that the market's around the same size more generally in terms of the size of the stock market, the funds industry. So I think this leads me to believe that there's a lot of room to run here in Australia as the concepts of indexing become sort of more well ingrained across different types of investors. So some of the more recent trends we've seen, smart beta, big topic around the world in the passive investment space, and this chart just shows different categories, whether they be and here, for those of you who aren't that familiar with smart beta, we're talking about non-market cap weighted indices, whether they're equal weighted, dividend income strategies, low volatility or different what we call factor indices and financial products to track them. So in the last several years, this has been one of the bigger growth areas in passive investing and the exchange traded fund industry. And as of the end of 2016, these products have grown to about $322 billion globally. So that's around 10% of the total industry. So that's been becoming an ever larger share of the overall market. Now, connecting this back to ESG, so one of the big themes in the ETF industry globally in last year, I would say, is introduction of a lot of new funds that have sustainability or ESG characteristics. In the US, I think there were 21 new product launches in the ETF space last year, and that actually doubled the number of products available in the marketplace. So they continue, these products are very small from an asset standpoint, about $3.5–4 billion. So that's tiny when you look at the sort of the larger industry. But I think that given a lot of the, I think there's a good chance that given the new products, a lot of the interest in the space, this seems to be one of the areas that may lead to kind of the next leg of growth in the passive investing space. So with that, I'd like to call up my colleague Martina Macpherson, who's head of our ESG indices at S&P Dow Jones.